Hi, it's Eric with the HIEMIM Africa Fund, giving the update for May. The fund was down about 2.8%. The shorts in Skatex Solar, Anglo American, and Kumba Iron Ore were the biggest negative contributors. On the positive side, Hikma Pharmaceutical, Endeavor Mining did well, but it wasn't enough to offset the strong moves in the short portfolio. Towards the end of the month, we covered some of the shorts, added to the longs, and the fund was about 10% net long at the end of the month. So we've had so much volatility this year. We've had the big sell-off, the big rebound back up. It's hard to think. Only half the year is over, or not even. So it's a good time to kind of step back and go, wow, so much has happened. What looks interesting here? What doesn't? And what could be good for the second half of the year? If we look at the African Eurobond space, we've invested there a lot in the past. The bonds sold off a lot. They have rebounded quite a bit as the African issuers accessed the IMF Rapid Credit Facility, got themselves some breathing space. But there are already starting to be a lot of concerns about the recurring debts in these countries and the growing amount of US dollar debt. And I think what we're going through this year is just making all of that worse. The budget deficits are increasing, and the amount of US dollar debt incurred continues to grow. So I'm concerned whether these prices will be sustained in the period in the years ahead, even with the strong reach for yield. Similarly, with the African local currency debt, it's been a great trade for the last 2.5 years. We've had very high rates in Africa, and the central banks wanted to keep rates high and keep the currency stable, even if that was slightly negative for the local economy. They really wanted to fight inflation. But I think that era is over. The central banks have been cutting aggressively with the sell-off to support the local economy. You've seen South Africa cut rates by 3% down to 3.75%, which is one of the lowest rates we've seen in decades. Kenya cut rates by 2%, and Egypt also cut rates by 3%. So if central banks are willing to let the currency devalue a little bit and the actual rates are lower, it makes that local currency trade a bit less interesting. But this could all be good for African equities. With lower rates, a bit better liquidity, and even if the currency is weakening a bit, you've got African equities trading at historically low valuations. And now finally, African local investors might be more interested in their own markets. For the last 2.5 years, when they're earning 15 to 25% in their local currency, they didn't have much need for the equities, and they weren't very interested in them. But now I think with the rates lower, the potential for a bit of currency weakness, I think they could be enticed back into the equity market. We've been buying selectively in mobile companies, exchanges, technology companies, and we've also been buying South African banks, where we're kind of looking through the impairments in 2020 and out to the valuations in 2021, which are very interesting. And I've also wondered if we could be surprised by the loan growth in 2021 as African businesses and consumers wake up and see, wow, we have some of the lowest interest rates in decades. And so maybe we get a positive surprise on the loan growth. Finally, we're also looking at some very depressed equities in Kenya and Egypt, which haven't moved yet. So thank you very much.